Manager at Equity Intelligence. He joins us from Kochi. Porinju, hi, good morning. The eternal bull that you are, what is it that you're making of this, not just India, but emerging market sell-off which is taking place? Is this the ripe opportunity to buy stocks that you wanted to, or do you think the market is going to drift down even further?
Good morning, Aisha, and all the viewers. The world is going through tough times, uncertainties, like never before. That's a fact. The outlook for markets, the industries and stocks, the companies in specific, there had never been so much uncertainties and lack of clarity. Sometimes it's very fearful. Investors can't take decisions. What can happen to these companies, this industry next year or after 5 years? So there is the world is going through such kind of a challenge when it comes to doing business or investing. So in the context, in fact, India is in a better position. We are in a very, very good position, but it's a bit unfortunate. Many of the vision of the government, many of the much aspired reforms are not really going through, and the investors are very much concerned about it. That's why we are witnessing a lot of tweets and remarks about our legislators, the opposition. There is a big concern. So that is the biggest concern today for the investing community in India. At the same time, as I told, India is in an advantageous position structurally and fundamentally. That is something investors should bear in mind. And it is not time to go bearish on the markets for whatever reasons. So I'm bullish on the markets and on a fundamental basis. But stock picking is the game, as I always talks. For that, even 2016. The next year is going to be very good for Indian investors.
Right. Porinju, if I look at the market setup, the basic optimism is coming from the fact that Indian economy will heal and Indian economy will make a comeback. Now, that's a very broad-based assumption that earnings recovery and corporate cycle recovery will start. So you should buy into cyclicals, you should buy into companies, you should buy into financial sectors which will participate when the recovery happens. But if I look at the market setup, L&T is at a 52-week low. Axis Bank today touched a 52-week low. Bharti is at a 52-week low. BHEL is at a multi-year low. So do you think somewhere the market messaging is very different? We all want the economy should recover, but markets currently are not rewarding or by associating with those stocks.
Nikunj, I appreciate that question, and this is exactly in line with what I have been talking on it now in the last 1 year. It is not the well-known blue chips and FII fancied stocks what investors should look at. And Nikunj, I don't know you are aware about the fact that hundreds of mid-caps and small caps, maybe 1,000 and more, such companies have gone 50%, 100%, and some of them 500% in the last 1 year. I have been talking to investors, I have been through the channels, the Nifty or the mainline stocks are not going to be in favor for the next many years perhaps, They have their own challenges. But at the same time, again, this is time for a warning for investors who are investing into the small caps and mid caps. Warning in the sense, now there's a crazy, that moment happens, hundreds of stocks take part and a lot of unworthy stocks also move up beyond, any limit. So everybody chases some kind of set of stocks and it goes beyond values. So I think last 2-3 days, if you notice, there's a significant correction. I have to tell you, my portfolio management was down by 4% yesterday. Not because I am holding anything stocks which are not value, but generally a depression comes in the mid cap and small caps. It happens. There's a big sell-off, broker sell-off, leveraged position being sold off by the financier, could be broker or banker. So that kind of a thing happened in the market and it rectifies. So in that context, I feel the ongoing correction in mid and small caps, it is a healthy correction. Go sober about it, never compromise on the valuations. That is a key for investing in the markets. And the correction in the mainline stocks, that has been happening for the last 1 year. And that is also a healthy correction in tune with the fundamentals of those companies. Please understand. Because of FIS continuous buying
Porinju,
or the large mutual funds or the large funds, large investors.
Porinju, allow me to interrupt. That would be my question essentially. Are you individually as well, because of this correction, taking the opportunity to deploy funds into the companies that you already own, and that list is very well known, or are you looking for bargains in newer areas?
I find I am very comfortable holding on to the stocks we are holding today, and I think I am a portfolio manager whose stocks are all known in the country. Everybody can access that, and we don't find anything wrong about it. But it, sometimes some of the stocks comes only after a stage of our accumulation, not with any vested interest, but it happens. I would like to share the ideas with the potential investors, stock ideas or the industry-specific ideas. I'm very proud of that, and I believe thousands of people have been benefiting out of that value investing philosophy and soberly picking stocks, identifying values. So the kind of stocks what I have been always talking, the TCI or FCEL, I think FCEL is going to new high today. HSIL, NIIT. So these stocks are well known as we have been holding in our portfolio management for a long time. With a long-term perspective, we have been holding and buying these stocks, and we are even buying some of those stocks for the new clients joining today. So what I mean to say, this valuation now TCI, maybe there was a lot of hype about GST, and GST a very important legislation for the country. It's not happening, or there is an uncertainty regarding that. At this point of time, Niraj, I would like to mention something. Normally, we are not supposed to talk politics on the business channels. It doesn't make any sense. But today, I'm telling the investing community, the investment activity in the equities, there is so much, a lot of sentimentally at least, connected to the politics today. And we all use the word patriotism. So a lot of people in the market or otherwise they feel, what is patriotism? Patriotism doesn't mean, in my opinion, you talk against Pakistan or somebody, some of our enemy countries or whatever. That is not patriotism. A lot of people think that is patriotism. What is patriotism? Patriotism means the interest of the nation above the self.
Right. Porinju, TCI, of course, is an idea which is well known. You've been a long bull on this one. I'm surprised to see a name like Ajmera Realty. We Mumbaikars ourselves, don't talk about this company that often. Tell us, why does this stock interest you?
See, you might have seen, I have been, feeling that the real estate companies, some good ones and, some of the not so good ones, I have been seeing great value in many of these stocks. And Ajmera is a small company based in Mumbai. But more importantly, I have talked, if you remember, on Shobha Developers, Godrej Properties, and Oberoi Realities on our channel. And these stocks are staying very firm, even in a weak market. So basically, because there is a lot of accumulated value, the industry has been going through bad times. It may continue to be bad. What I'm telling you, I'm not bullish on the real estate properties or the apartments and land. I'm talking about these companies. Some of them are quoting at 10% of the intrinsic value. Maybe a company is having a land bank or assets and business model worth say 1,000 crores. You can own the company for 100 crores enterprise value. So that is the situation in many real estate developers, many other companies which own land bank in this country. So that basically means even if the real estate prices goes down by 50%, these companies are still worth investing into, looking at their value. But and the major for the investors, especially in the mid and small caps of the segment, the challenge was about the management. People, many of them don't trust the managements, not well-known people, or there was cash element in their dealings. So these were the challenges which we have a visibility today. I think with the new government and they're trying to bring down corruption and black money, a lot of efforts are going on. Some of them need support from other parties and the public in general to make it successful. So those kind of efforts towards reducing the black money dealings is going to be one major trigger.
What is your price target for Ajmera? And I'm going to pin you down to let's say a time frame of 3 years. As we speak today, Ajmera Realty is at about 150 rupees. Do you think the stock could touch 300 rupees in the next 2.5 to 3 years? I mean, fair here. 3 years is a long time. Your smile tells me that you have a bigger price target. Either I'm being conservative.
See, Nikunj, there's a lot of restriction from the regulator to talk about stocks like that. But I can tell you, if I become the managing director and having control of this company, it will be 500 rupees in no time, in 24 hours. So there are such companies, a lot of companies.
Wow.
I don't want to recommend these companies. I don't know whether this management will really go professional and reward the minority shareholders. I don't know. So uncertainties is the key, and uncertainties is the opportunity in the market. You get at throwaway prices many businesses, many companies, many stocks, just because there is negativism, some negative elements there you can be afraid about. It could be about the balance sheet, debt, management, and whatever kind of things, scams. So sometimes these negatives, which was our theme 1 year ago, if you remember, I used to talk about negatives, companies with the negatives, it's a turnaround potential. I'm telling you, many of the stocks which we talked in our ET now, it has gone 5-10 times in the last 1 year.
And Porinju, that is again one hunting ground where you've historically, where you've historically like bargains. Managements which are on a verge of turning their businesses turnaround. And I just get a sense that 2016 could be a genuine year for some of these companies in terms of turnaround. It could be some real estate names, it could be the ADA group, it could be Havells. So what do you like from this so-called turnaround space?
Yeah, it's a very valid thing. Beyond, I think hotel industry, I have tweeted about this a couple of weeks ago. And if you remember, I talked a few months ago, I talked about Jet Airways and the airlines industry turning around. Maybe not many people remember, because when I talked that on the TV, nobody was impressed, because that was the mood. Nobody wanted to listen about Jet Airways. The stock is almost going double since then. So what I mean to say, hotel industry, the hospitality business in India, it was under depression for the last almost 10 years. And some of the good, well-managed companies also were, struggling. I think the next 3 to 5 years' time in India, these companies are going to be in a much better position. Many of them are turning to be profitable from a loss-making or kind of situation, and the growth is visible. Occupancy is going up, just like what we had in airlines since a few months ago. So I feel I'm looking at the stock. I have been looking at the stocks in the hotel industry. Eastern be nearly 7,000 crores kind of a market cap. I think it's a very decent, well-managed company with a clean, debt-free balance sheet. Some 30 properties. They may be adding another 10 properties in the next 1-2 years. I think at a very, very attractive valuation, I would say. Not only by going by their property values, even by the operational profits and kind of things. Very well-managed company.
Sure.
I think this is something can give you decent return in 2016.
Okay. So, when the Havells news broke out, I think we were talking about distressed sales happening, companies trying to revive, and I think you were making a point on the hotel industry or Indian hotels. I'm not quite sure which.
Yeah, hotel industry is something to watch for the next 2 years.
Oops. I think that is... Porinju, yes, we can hear you. Please go on, finish your thought.
Yeah, this industry is something to be, kept in mind by investors going forward, because they are sitting on huge assets. Some of them are irreplaceable kind of, assets what Indian hotels or Eastern hotels have. Of course, I want to disclose before all this, we are holding Indian hotels. We started buying recently in Indian hotels, under PMS for some new clients. But there is no need of hurry to buy these kind of stocks. See, the numbers may take time, but the industry sentiment is changing. The fundamentals are also improving. Occupancy is going up. One should watch this industry going forward. Another thing, Neeraj, about the markets, I feel we are witnessing increased inflow from domestic investors into the equities. So that's a very good trend, not only just by the DIA buying I'm talking about. There is a trend. The other asset classes like gold and land, real estate and all, they are going down. Means people are not much impressed about those investment asset classes going forward. And there will be more of savings going to the financial assets, especially equities. This is something very important. And the other side, what FIs have been selling here and there, I think that also will come to an end. The world is looking for investing into India, I'm telling you. We are in such a great position structurally, so that will be noticed. So we have to rationally expect FIs coming back to Indian markets and buying stocks. I believe there is value in the market overall. After the huge correction of 1 year in the pivotal stocks, some of them may also be looking good. So those big names, some of them can give you 20, 30, 40% kind of return next 1 year. Some of the beaten down ones.